Hey everyone, welcome back to Corporate Decoder, the place where we learn companies are not always what they seem, especially when they have to tell the SEC everything, including the kitchen sink. Scott's Miracle-Gro is dropping its 2025 annual report, and boy, it is a thick one packed with numbers and risks. But we're going to cut through the jargon and figure out what it all means for you, the investor, or just the curious bystander. So, grab your favorite lawn chair and let's dive into this report. We also have a Discord community linked in the description below if you want to chat more about these filings. Let's kick things off with the top line net sales in fiscal year 2025. Scott's Miracle-Gro brought in $3,413.1 million. That is a bit of a dip compared to the $3,552.7 million they made in 2024. Now, a small drop like this isn't usually a red flag. But it is worth noting they saw a 2.1% decrease, mostly due to selling off some bulk raw materials and AeroGarden products in their US consumer business, which they didn't do in 2024. We also see a 1.0% volume decrease in their Hawthorne segment, their indoor and hydroponic gardening business. Prices also took a slight hit, mainly because they invested more in consumer promotions. But here is where it gets interesting. Look at the gross margin rate. It jumped to 30.6% in 2025 from 23.9% in 2024 and a dismal 18.5% in 2023. That is a huge improvement. What does this mean? It is like they managed to get their products made and delivered for a lot less money, or they sold them at a better price without losing too many customers. The biggest reason for this jump is lower material costs, especially in their main US consumer business, and a better mix of products sold, which means they sold more of the higher profit items. Lower warehousing, transportation, and manufacturing costs also played a big role. Plus, they had fewer charges from things like writing off old inventory or restructuring. Now, their selling, general, and administrative expenses, or SG&A, went up to $603.4 million in 2025, an increase from $559.0 million in 2024. A big chunk of that increase is in advertising, up by $11.3 million, mostly because they spent more on ads for their US consumer products. They also spent more on short-term cash bonuses for employees and other marketing efforts. This rise in SG&A into some of those gross margin gains. Moving on to impairment, restructuring, and other charges, which sounds like a company cleaning house. In 2025, these costs were $83.8 million. A big drop from $146.3 million in 2024 and a massive $466.1 million in 2023. The big hit in 2023 was mainly due to writing off a ton of inventory in their Hawthorne segment, which is their indoor gardening business. In 2025, a significant portion of these charges came from selling their Hawthorne professional horticulture business in the Netherlands, resulting in a $17.7 million loss on the sale. They also incurred employee severance costs and a $7.0 million non-cash loss from exchanging an investment, which is a bit of a complex move involving Rive Capital and Fluent. This significant reduction in restructuring and impairment charges in 2025 compared to previous years is a good sign, showing that they've worked through a lot of the costly adjustments. So, what is the bottom line here before taxes? In 2025, they reported income before taxes of $221.7 million. That is a huge turnaround from a loss of $23.6 million in 2024 and a massive loss of $453.3 million in 2023. This change is really driven by that improved gross margin and reduced restructuring costs. And after taxes, the net income for 2025 was $145.2 million. This is a massive comeback from a net loss of $34.9 million in 2024 and a staggering net loss of $380.1 million in 2023. This turnaround is largely thanks to the improved profitability in their core US consumer segment and less need for large write-offs. Let's break down the segments. The US consumer business, their biggest one, had net sales of $2,993.7 million in 2025. This was a slight decrease of 0.7% from 2024. The profit in this segment, however, jumped by 15.0% to $572.6 million. This shows they are getting more efficient at making money from their sales. The Hawthorne segment, their indoor gardening business, saw a big drop in net sales, down 43.7% to $165.8 million in 2025. This segment has been struggling due to an oversupply of cannabis in the market, leading to lower prices and reduced cultivation. They also stopped distributing other companies' products to focus on their own brands, which lowered sales but improved profitability. While sales plummeted, their profit swung from a loss of $14.2 million in 2024 to a small profit of $2.8 million in 2025, showing they've managed to cut costs effectively. Now, a word on who buys their stuff. The Home Depot and Lowe's are their two biggest customers. In 2025, the Home Depot alone accounted for a huge 34% of their net sales. That's a lot of eggs in one basket. If the Home Depot decided to buy less, it would seriously hurt Scott's Miracle-Gro. Let's talk about debt. As of the 30th of September 2025, they had $2,119.7 million in debt. This is a significant amount and, as the report clearly states, it could limit their flexibility and affect their financial health. While they did pay down some debt, the sheer volume means a big chunk of their cash goes towards interest payments, potentially leaving less for things like innovation or returning money to shareholders. And who controls the company well? Hagedorn Partnership LP, which is linked to Catherine Hagedorn Littlefield, a director, owns about 23% of their shares. This means they have a lot of influence on big company decisions, which can be good or bad depending on whether their interests align with other shareholders. Like most companies, Scott's Miracle-Gro is also worried about cybersecurity. They admit that their systems have been and could be vulnerable to various cyber threats. While they say no major incidents have materially affected them yet, they acknowledge the increasing sophistication of attacks, partly due to AI. A data breach could seriously damage their reputation and finances. On the legal front, they're facing some serious shareholder lawsuits alleging misstatements about their inventory, sales, and business prospects. These are major lawsuits seeking unspecified damages. The company says they believe the claims are baseless and plans to fight them hard. They are also involved in asbestos related lawsuits which they believe lack merit and have not set aside any money for them yet. So what is the big picture here, Scott's Miracle-Gro has had a rocky few years, especially with their Hawthorne segment struggling and dealing with significant restructuring costs. However, their latest report shows a strong comeback in profitability, primarily driven by improvements in their core US consumer business and reduced overhead. They've managed to cut costs and improve efficiency, leading to a much needed increase in gross margins and a return to profitability before taxes. However, their heavy reliance on a few major retailers like the Home Depot is a significant risk. The ongoing legal battles, especially the securities litigation, could also become a major financial drain and reputational hit. While the debt level is high, the recent refinancing of their credit facility and positive covenants in their new agreement suggests they have a handle on their financing needs for now. In conclusion, Scott's Miracle-Gro is showing signs of recovery and improved operational efficiency. The key for them will be to continue managing their US consumer business effectively, diversify their customer base if possible, and navigate the legal challenges ahead. The Hawthorne segment remains a question mark, but their focus on their own brands might pay off in the long run. That is our deep dive into the Scott's Miracle-Gro Company's 2025 annual report. What are your thoughts on their comeback and the risks they face should they be worried about that Home Depot reliance? Let us know in the comments below if you found this breakdown helpful. Please hit that like button to help the channel grow and subscribe for more corporate dissections like this one. And don't forget to join our Discord community linked in the description for more insights and discussions. Thanks for watching and we'll see you in the next video.